All right, guys, back here with you on Tuesday, the 27th, kind of early afternoon here. And I went through the voting here. It looked like the Nasdaq was a close call. But I think there's some things here we can deduce from what we're seeing here, maybe some teachable moments. Some things that atypical from what we usually look at here. And I'm trying to stay with this theme of reducing the dependence on Elliott Wave here so you guys are not getting caught in the paralysis of analysis. I think this Elliott count is a little unclear, or to say the least. And we've got just insane volatility. So it's very, certainly difficult time to be trading. But the volatility creates opportunity. Of course, obviously, it equally increases the risk. So you really want to be precise about what you're doing and very disciplined with the risk management. So I'm just going to focus here. Here's our 18 low. So hard to, the Elliott, what is it? Right? You're gonna try and squeeze it into a 5 with some, maybe this, right? That terrible symmetry. It looks more like an ABC to me. So if I had to put a count on it, I'd be more inclined to think this is likely an X wave if this is a WX, right? Very much like the S&P. But let's keep the Elliott out of it here. Now, so how would you approach this? Right. If you're not thinking about Elliott Wave, well, just right off the bat here, just kind of looking at, so I can certainly see that. If I zoom in here, I can certainly see that this area here, this has been critical resistance. Here's our absolute high. So I can look and go, all right, well, let's get it right on there. Am I on there? Right on it, right? So we had actually a wick go through here. So, but this clearly, or you can take that left here. This has been the stiff resistance. Now, this is a conundrum, right? So you look here and you go, okay, well then, wonder what's there, right? So we pull from the high to the low, right? Just slightly wicking through. So you wonder, right? So is it the volatility? So you look here and say, well, how is it on the other side? It's even worse here. So we're just getting sloppy technical trading here. So this is so far. Well, here we go to 786. This, I think, I had some members ask me about this here. I think it's not unreasonable to consider that with the increase in volatility that they may be accommodating more price action here. So I just thought I would test this here. So I took the 65 to the 68, thinking, well, if I was dealing with this volatility, how would I approach that? And then here we're getting it to the tick. So is that an educated guess? Yeah, pretty much. Right? It is. That is not how it was taught to me. But that was, when was that? Right? That was over 10 years ago. And now we're given the advances in, obviously the code they're writing into these algorithms, and again, kind of an educated guess that with the increase in volatility, they may be accommodating it that way, right? Again, that's just an educated guess, right? But I'm going to go back to back to the 65 here, because we're not gonna we're getting a reaction here. So given the reaction coming out of that, note what's happened here. So from this pivot to the lower pivot here, we do it again, right? And this is something that you'll see pretty consistently. If you're getting slight breaks here, you'll often see it be matched all the way down. So again, is that the 68? Right, 68 catches it to the tick. Have they just, again, increased that stopping point to accommodate all of this volatility? Again, educated guess. All right, but we don't necessarily need that. Okay, so let me let me pull out here. So one thing that you look at this and you go, why does it stop there? It's not, the only technical factor that I can find here, well, one note here, we get the little low volume notice, it's tied to this pivot. So we've got some structure that seems to have been influencing. So note here, we catch it multiple times. So it's resistance. Now they break the support, get through, now it becomes the support. Right, and then teed up beautifully here with the little low volume node that you see there, is we don't have market acceptance there. Here, it's resistance again. Yeah, we're getting a couple of wicks through, but this clearly an important level to the market, right? That's what's creating that little divot. So I kind of, open this up. So sorry, guys. Well, just thinking about geometry. Well, my eye, I'm immediately drawn to some of these angles. So I'm gonna stick with I've been using this. It just has some advantages here. So I'm using the fib channel, but note all I'm doing is essentially I've got it's like our wolf range, as I've shown you guys before. So I'm just eyeballing here. So I'm looking. So I'm going down to this low here, and I'm just kind of going, what can I find if I start connecting up here? Well, I can't help but notice that I can catch these two. Now I can't catch this one. If I catch it here, I'm getting overthrow, but I can catch these two here just beautifully. Get it right on it. Now, okay, now where am I going next? Well, I see this range, as we were rallying higher, I notice that I can get almost all that. Well, yeah, we got a little throw over here, but I'm getting it almost just perfectly here. All right, so it gets my interest. Now, note here that what that means is that for the way the fib channel is written, the 1.5, the 2, the 3, all of that's going to be above the market, right? Now that may be certainly possible, right? I mean, shit, who knows? We're going up here to get something like that. So I wouldn't necessarily want to take these off, or I may redraw it if we break this high and we're going off. But let me just give you an alternate way to do this if you were inclined to. Right? This is how I would do it and how I did do it. So because I want to project down, what I would do is just draw the exact same thing. So I would just do it on top of it. Right, so well, let me get it right. Get it right on it. All right, so let me get right on that. Now I'm just going to draw down. Right, because I want all this below the market. So if I get that right on there, okay. So all I've done is just double it. Now, if you wanted to get rid of the upper one, because we don't necessarily need that just then you can do it, right? So that way I get all these angles, and all of this is down here for me to be looking for. So now, just kind of eyeballing it. Well, I noticed that, okay, well, right here, right, interesting, right? So there's the 50% catching the pivot right there. All right, these two are good, so that kind of catches my eye. So I look at that and I go, okay, well, here's my absolute high. Here, this was something. That obviously that was important to the market. So I get the initial, well, you can actually see there's a push down, which gave us the low, and then that low became the resistance. So this means something to the market. So immediately when I see that, right, first thing I'm thinking is wolf range, right? So I've got a range, right, that's been tested multiple times. I want to project down for range expansion. Nothing fancy, right? So I'm going to change this to the wolf tool. I'm going to go over to my wolf range, and I'm going to bring it over here. All right, so let me get right on that pivot. And let's get right on our high. And what do we see there? Right, it's exactly 200% of it. Or so, right, so let me redraw it. So here's the range, here's 200% of it. Now, coincidence? I'll let you draw your own conclusions. I would tell you there are no coincidences in the market, ever. There's always something technical there. Okay, so if it's a pivot that's going to hold, right? So I mean, random pivot may not be technical, but significant pivots, there are no random pivots. Okay, so I've got a range expand. I've doubled the range here. Okay, interesting. All right, so okay, all right, that's fancy chart work. How does that help me? Well, I need to build a little more case here. What else can I find there? Okay, well, so I notice here that if I grab the absolute high here, I'm just thinking, what else can I find there? Well, I might look for some pitchfork. Median line confluence. So if I get right on that, there, I'm right on it. Sorry, hard. Well, so it's close, but I notice like, if I come over a pivot, get it right on there. Good. Right there. Okay, so now I'm building confluence here. So now I've got this. Now I've got a pretty technical pivot here. So I've got multiple. So I've got the 200% range expansion. I've got a median line here. I've got the structure from that prior pivot, all telling me there's a reason why it stops there. Right, so right now I've got a series of higher highs. So this might imply, well, okay, so does that mean bulls are in control since we had a technical pivot here? Well, really, you'd have to say that we're still we're stuck in a range. We're stuck in the lower. Well, you could think of it this way. So here's 100% of that range, right? Then just clone it. Or just redraw it. Here's the second 100% of that range. So where are we sitting now? We're in the upper half of that range. All right, so does that tell me anything? Well, so we're here, well, there's 50 of the range. Right? That may be an easier way to look at it. Here's the 50% of it. All right, so bullish above, bearish below. Well, as we come down here, these wicks are getting rejected pretty aggressively. So we're selling off, rejected, selling off, rejected, selling off, rejected. But look how the center line seems to be influencing every time we come up. Now, much like the S&P here, well, so note here, we get a lot of lines. So you go, oh, all right, shit, all right, they're going to hit something somewhere. I hear that, right? I get you, right? So, I mean, now, so if we were to come down here and tag something like that, and then something, that kind of action is, that's the magic of the market, right? So I of course, I'd love to see that. Now, is that possible? Like I said, right? No random pivots. Well, there's a lot there. So in the context of where's the next trade, well, again, these are big swings. So obviously, you're likely not going to make a trading. Well, I shouldn't say that. You might not make your trading decision for the next entry based off of a 4-hour right here in the NQ, right? We can't go to the CFD or to your FX broker, so we got to trade it in the futures market. Maybe did they do the micros? I think they may have done the micros in the in the Nasdaq as well. I can't remember. I know they did in the S&P. So if that would be a possible way to accommodate some of this volatility here. You could certainly make a case that anything below anything below this upper range, right? That's where resistance comes into the market. Anything above that, right? So if you're looking to get short, which is what I'm bearish the market right now. So anything below that, I'm looking for opportunities to be a seller. So if we're retracing here, I've got all sorts of shit. Look at all the targets I've got. So let's go down. Let's try an hourly. So tag. Now where are we here? Right, I think I just showed you this. All right, so if I go from the pivot here to my wrong one. Let me get my right. We've just had a slight break there. So you have at this point there is no clear evidence of who's in control. So I can look there and go, okay, well, they broke on that side. So, again, right, educated guess. Maybe they're using the 68, maybe, right? Here's the 38. Is there anything else here? Well, again, I'm kind of noticing, oh, shit, I guess I got to take all this stuff off. Oh, shit, hang on. I can get that back. Okay. Let's take this off. That's what I was trying to do. Well, kind of noticing here that this area here, we appear to be doing something very similar. So let me grab this. Oh shit, we'll just redraw it. So do you notice what's happening here? So do you see how we're framing this? We're getting these ranges. Well, so again, immediately I start thinking, okay, well, something's going on there. Let's look at range expansion. So let's go back to the wolf range again. Well, it's not to the tick, right? I see it. It's not to the tick. Let's get right on there, right on that low. Pretty close. All right, so here's the range expansion again. So this is important to the market. This structure. So I'm essentially doing the exact same thing. All right, so where is there a trade? Well, I don't know. Again, there's not always going to be a trade here. So now at this point, you got to get a lot of lines here. So one thought is you can start hiding them. Right, so we can just start hiding them and then always bring them back if we wanted to. Right, so now I've just hidden all of those larger degree, the pitchfork and the median lines here. And I can kind of look at this and go, all right, what is there anything I can see here? Anything I can do here? Well, acknowledge certainly that you've got high risk in the market here, and you've got potentially now, you could have another channel going in here. We could have something, see how I can connect all three of those. Now, I just start looking, right? What can I get that might get, well, the obvious ones down here. Let's get right on that. All right, do I want to go here and you maybe say throw over here from the absolute high? Let's get you back up here. I just start looking. So there's a low. All right, is that telling me anything? Maybe. maybe, but I do like the way I'm getting framing here. So this I would be bearish below. So because I've got this range now kicking in again, just as it did up here. Right, so note what's happened here. So this is the upper range. Now I get a secondary range below. Interesting, huh? So it seems to be whatever algorithms are in play here and are dictating the market, they seem to be range expansion algos, right? Which I promise you that's not random, right? So an algorithm is in here. This is likely an algorithm here that we're trying to get a handle on what they're doing and what they've done last. Since our traditional algo is breaking on both sides, right? So that doesn't mean you go, oh fuck, you can't trade the market then. No, that's not what I'm saying. So I've got some parameters around the market. So I would, again, if it's hard to see, this sometimes will help. So anything, if I get a retrace up here, right? So if I get something like this, there's the kind of thing that I might look at, because where's your stop, right? Very, very reasonable risk reward here. You don't have to, again, it's not for, the orphans or the elderly, right? So this is, that it's relatively high risk here, but you're getting, you've got multiple targets down here. So you've got a potential, just a straight, you could think of it as a trend line trade. We're coming back to with no point of control here for visible range. We're coming back into, oh, look how conveniently that lines up, right? All of this market acceptance is up here. So if we're coming back up to this, well, is there anything from below? Again, just trying to connect. What can I connect here? Right? If I connect it that way, yeah, I got some throw over here. Do I want to go that high? I'm looking for multiple connections. All right, so I see I can get some of this here. Yeah, I've got a little throw over. So here's our center line. Well, we could do it this way as well. Let's go back. Let's use this because I like what it gives me here. So I can come up here and look, okay, do I want to be lower? Maybe I want to be lower here, looking here. Again, I'm just looking for, so here's the 1-5 connecting, here's this connecting. Do I want to be there? I'm not sure yet. I'm kind of looking here. So if I'm up here, if I go to the pivot, to the absolute high here, well, I'm kind of in a cluster here, which might be supportive of the idea that there's a sell setting up to come down here. So again, because we've broken the traditional algo by a couple of wicks, I'm more comfortable on the sell side here. I'm not looking to be a buyer here into this. Right? I know that's been resistance, right? It was what framed the move down, so we're coming back up to test the lower edge. Okay, all right, so think about it this way. Just like we did here, we came back up and tested the lower edge of that initial range. Look what we're doing here. Right? We're testing the lower edge of the range. So I'm on the sell side here myself. Right? I think the play is short. Right? Now, so let me pull back out here and show you one other thing to maybe kind of get you thinking that way. So I've got visible range here. So let me pull this off here so we're not too convoluted. Okay, so if I look at visible range, so here I am on a 1 hour, just trying to get just this data here. Well, notice here, right? If I break here, I got a lot of room down here, right? Very little support there from 2 to 300. If we break here, right, see, so look where you start to put all that together, right? So here's the upper range. Here's the secondary range, right? So here would be that if I pull it all the way over here, right? We've got potential to go here, 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 all of this. And there's no support down here, right? Because we've not had market acceptance. That's the broader point. Because these wicks were so quickly rejected, there was no base of support. And on the way up, it went so fast, there's no time. You get little, right? So you can look at it and say, okay, well, something here, what is that related to? Just pull it across. Oh, okay. We had a lot of market acceptance, a lot of trading here. Buyers, sellers, happy, happy, happy. We break away. Now, as we come down here, if we start to come down again, I think you can sell it right here. Right? And anything in this range, if we start to come down again, there is nothing underneath, right? So there's a long fall. Then you got to step way back out. Oh, let's go to a 4 hour and see if there are any targets down here that would make sense. So we think, okay, well, right, it's not an impulse. I think we can probably agree on that. Let me pull that off here just to clear up some space on the chart. And of course, this can keep going. We can go 400, 500, 600. But let's just, you know, from the low, right? Let's that would be 50% of it here. But let's put our traditional back on. Right? So look how look how this lines up. 38 here, 50 here, golden zone here. Right? All just conveniently all lining up here in that lower range. It's just, you gotta love that. All right, so I'm not giving you the go down to the 5-minute chart. Here's your entry. What I'm telling you is the opportunity. If we start breaking some of these pivots, so look how that all dovetails in with the structure. The lines we drew. Jesus, look at this. All right, look what happens when I connect here. 38, 50. We go into 618, golden zone. Wouldn't surprise me. So just to kind of finish this off here, can I come back here? Anything to help me here? Look where that lines up. That's the kind of move that's teed up to be there. Now you could certainly do it in options. If I were had a 5 to 10K account, that's probably how I would do it, right? So you're not going too big here, but this is a home, you're swinging for the fence there. So you don't, again, it's not cut kids' tuition money, but you've got huge, what's the risk reward? All right, so let's just say you're shorting in here, stop out. If we go back above this, right, that was the key resistance. Stop out here, target way down here. 6 to 1, right? That's just in the futures, right? Your leverage would be, the percentage return would be much higher in an option trade, but right, you got to be you're time sensitive there. So I would not advise. So that's projecting November 19th out here per this geometry. So yeah, you're probably all right with December options. All right, to get that. But remember, time decay ticks, tick, tick, tick every day. So it needs to happen relatively quickly. And if it breaks it, you got to have an out point. So if we break that upper range, if we break out of that resistance zone here, out. Maybe you reevaluate again, but don't stay in that option. That's always the temptation. It's got another 2 months in it. Let's see what happens. I have been that guy. I was an option broker for 10 years. I saw hundreds and hundreds of clients do that. Do not do that. Have a point. If it breaks above it, you sell that option. I don't care what the loss is. You sell it because there will be some time value left. You'll take a loss, but it'll be much smaller than if you go, oh, well, let's give it a little more. Let's give it a little more time. You never know, right? This thing could keep, it's going to bounce here. We're not going to get a new high. It's going to bounce here. Oh, there's the geometry of that angle. It's not gonna. Trust me, guys. Right? Have a trading plan, and I know it's. First challenge is to actually have a plan. Second challenge, right? And I'm not so sure that the first one isn't the harder because most people don't have one. At least have an in out on any trade. This is where I am absolutely out. It could be 50% drawdown on the value of the option. Could be a break of a technical level here like we're talking. But don't just sit with it because it has more time left. Every now and then you'll get away with it, but over time, losing proposition. All right, so there's a whole lot of, here's my target right down here, 67.03, right, for what that's worth. There you go, guys. Lots to chew on. Okay, back.